welcome on board the management of Dr. Lal PathLabs as well. Bharath Uppiliappan, the Chief Executive Officer, joins us on the show now. Hi, Bharath. Thank you so much for making time and speaking with us. Let's begin by trying and understand the latest industry trend. Because has there been any improvement with respect to the competitive intensity, especially when it comes to pricing? What are the trends you are seeing on the ground?
Now, to understand the current industry structure, I guess, we may have to take a step back. I think a couple of years back when the whole COVID situation started off. At that point of time, there was a lot of excitement. There's a lot of what I would call importance given to the diagnostics industry. And a lot of things have happened since then. Now, what we are currently going through is the first year effectively after what COVID has settled down in the industry too. And as a result, what is happening really, in my view, is that the industry is now going back to basics, obviously with a twist in the way it delivers services today. What I mean by this is that, what is really important today, in today's context, is all about medical excellence. It's all about servicing capability and the way you manage your patient-doctor relationships very effectively. So I guess the industry is now kind of come back to realizing that it is good to be back on the basics front, and hence a lot of things which we used to talk about is really coming back to what we would do in the normal pre-COVID days, which is really looking about expansion, which is looking at strengthening the current core offerings and building consumer trust. So I think this is what has really changed from an industry perspective. One key learning out of the whole COVID situation has been that consumers have become more digitally savvy, and hence what you see really across players today is settling down of digitization programs all across. So all players have become digitally savvy, and now it is all about phygital play, which is physical and digital play coming together. So that is really what is happening. And in my personal view, I think there's a lot of focus on pricing, and we have talked a lot about pricing. But if you take a step back and look at the diagnostics costs...
Right. I just wanted to move right on and talk about the company in specific, Bharat, because since the month of July, we have seen the company take selective price hikes in the range of about 7% to 16%. Going forward, is there scope for further price hikes? Are you looking to improve your margins from the current levels on the back of this?
So I just want to lay the context here. Over the last 5-6 years, there has effectively been no price changes in the industry. In fact, pricing table has been going down for one or the other reason. Now, at the same time, inflation has been very high, especially on some of the people-related costs. As a company, we constantly rebalance pricing across various portfolios of tests. We don't talk about it much, but it is something which happens in the background as a normal course of routine business. So what I would like to say is that if you have made some adjustments, it is to reflect the increased cost of people over a longer period of time, but we also taken price drops in many tests, in many channels, etc. In fact, you will be glad to know that on the most commonly ordered test, which is what people really want to do as a part of the regular regime, there is no price change. So I think this whole pricing piece has to be understood in the context of what is really the drivers behind it. Now, coming to margins, I think we have said in the past that we would, continue to work towards going back to our pre-COVID margins. These pricing, rationalizations, increase, decreases, whatever we do, is a way to look at the competitive portfolio, is look at the, market, where is it moving, etc., and build a business rather than try and improve margins out of it. So I think that is the way one must look at it, is to say that we would like to go back to pre-COVID margins level and not use pricing as a lever to increase margin profile.
Okay, so attempt is to go back to the pre-COVID margin levels, but one of the impediments for the margins to go back to the level is also the fact that the Suburban business is a bit of low margin, right? What's the growth looking like in that business, and how's the integration really progressing?
In the West region has been a large opportunity, a white space geography for us. Suburban acquisition provides us a very strategic platform to build a business in the key market of West, which is possibly the top two markets of this country. And hence, Suburban is a long-term game in which we will try and build a business in the West, which mirrors possibly what we do in Delhi, NCR, and other parts of the country. So this is really a portfolio game of a geography, and it's a long-term play. And I think the teams are doing really well to integrate, to kind of leverage each other's expertise and build a very robust business in the west of India.
So, what steps has the company been taking to improve the user interfaces and better experience with ancillary digital services?
Wonderful. I think it's a great question. When you look at digital, there are 3 or 4 applications of digital in the whole diagnostic industry. That has been our realization. One, obviously, is the consumer interface of app, website, which provides convenience of either booking or of report download or searching for some information. So it's a host of work which you're doing to improve that experience space. Second, I think what is really not talked about much is use of digital technologies for really improving patient service levels. As you would possibly remember, we had talked about Control Tower as one such initiative, where we pool data from all data sources of this company to really track each sample and say, is it running on schedule or behind schedule? And what is that we can do to really get the patient the report on time or ahead of time? And that is a key differentiator for us. The third area of use of digital technology is actually in the medical field, which is possibly something which we don't talk about much. So as a company, we are constantly investing behind leveraging digital technologies, especially pattern recognition, image recognition, AI tools on the medical side to better improve the quality of reports, which possibly a human eye can miss or can have a different interpretation of. So we have invested a lot of capital on getting the AI medical side going, and we'll continue to build on that. So effectively, if you look at digital, there are 3 components of digital, and we are very well invested in all 3 areas.
Okay, so since you're talking about investment in the digital arena, let me talk about the investments in the actual labs, etc. as well. You operate an asset-light hub-and-spoke model, but going forward, what's the expansion plan here, and overall, what kind of organic deals are you expecting in FY24?
Right, great question. If you look at FY24, what we're really focused on, like I said in the very beginning, is to get far superior in execution on our basics, which is about geography expansion, which is about building stronger relationship with our current client base. It is all about improving better service levels to our patients all across the country. So those are some of the fundamentals which we are focusing on, and like we have done in the past. So we expect some of those obviously delivered through a twist of digital to yield good results for us as we look for FY24. We are very optimistic of what the future holds. We would once again look forward delivering double-digit growths, and that is what we're really focused on.
All right. Thanks so much then for taking time out and joining in and giving us a view on how business is shaping up at Dr. Lal PathLabs.